Nigeria's downstream oil sector is under fresh pressures. Rising petrol prices squeeze both consumers and marketers. A few dealers say higher pump prices have weakened demand and stretched their working capital, forcing some to pool resources just to stay in business. Well, there's a lot more here, but of course I've got with me right here Chinedu Ukadike, National Publicity Secretary, Independent Petroleum Marketers Association of Nigeria. He's joining us and he'll be shedding more light on this. If we can just have him on the screen. And I also have Femi Oladehin, who is also joining us, Managing Director, Argentil Capital Partners. I have both of them joining me today. Good morning, gentlemen. Yes.
Good morning, Perpetua.
How are you?
Very well, thank you. Okay, let me begin with you, Mr. Ukadike. Great. Let me begin with you, Mr. Ukadike. You mentioned that the increase is affecting business. I mean, I would like you to talk to us. Let's hear it from you.
Okay, well, from our outside, the Independent Marketers Association of Nigeria, you know, after the removal of subsidy, business is not as usual. There is serious increase in our purchasing value, which are the petroleum refined products, and product that we normally used to buy with around 8 to 7 to 16 million naira. We are now buying with over 45 million naira for 50,000 liters or 45,000 liters. So it becomes very, very tedious for independent marketers to borrow money, the cost of funds, and also so much money chasing few products. Because we are not also giving concessions like those in some industrialists that is banking with the Bank of Industry. We are also collecting our money from commercial banks. And those commercial banks charge us the same rates in which they charge other businessmen. And you can also agree with us that our profit margin is not as big as people would think. Sometimes when we use close to 45 million naira to purchase these petroleum products, at the end of the day, our take home might not be more than 300 to 400 naira, and it depending 400,000, and it depending on the areas where we are selling these products. So when Alaji, Dangote increase the pump price, we were also taken aback, because we also need to have to look for some more money to be able to top up with our initial capital, which the product was given to us at 699 naira, sometimes ex-depot 700, 705. But now product is now selling at 835 ex-depot, price 840, 829, depending on the depot you are buying from. So it's not really business as usual. So marketers are also struggling to be able to get capital to join and continue their business. You know, we are service oriented. Any one time independent market stop loading, it will drastically affect logistics. So marketers have also, make up plans whereby they combine with other marketers or other filling stations that is very close to them, to be able to buy petroleum product, to remain in business and continue to supply petroleum products uninterruptedly.
Right. Now, I was just wondering, I understand there are other factors that are responsible for what you're saying now, but didn't you envisage the hike, saying there was an over 15% reduction during the Yuletide? So if somebody reduced prices during the festive period, it's expected that someone reduced rather, it's expected that the person would want to increase when we are, when that period or that season is over. Is it about your own planning?
No. We're not expecting that, because sometimes some of these reductions are not just reductions by mere reduction. It depends on the cost of crude oil in the international market. You can also find out that within this period, under review, that crude oil was around 60-something naira. Now it's around 75, just because of the international thrift in the international market. So we've been expecting, because there was a statement made by NNPCL that there will be further reduction in price of petroleum product locally. So we are not anticipating this increase. However, we are aware that once the crude oil goes up, it will definitely, as factors of production, it will definitely increase the local price of petroleum products. We are aware of that. But sometimes most of these products and money we use are bank money. We borrow money with our facilities and continue to remain in business. So there's no way if you borrow money, you will leave the money and the bank charges will be on you. If there is a reduction in price, you return some of the money and also use the one that are required for you to continue your business. So that is the actual true position of independent marketers.
All right, let me come to you, Mr. Oladehin. I mean, I understand it's not just the 100 naira increase that's at play here. He already talked about one of them, which is the global prices hitting $70 per barrel. I'd like you to speak to us about these other factors, whether envisaged or realized, and how they are affecting or how they might affect Nigerians going forward.
Hi, Petrol, and thank you for having me on the show. The truth is that a lot of things have happened in the market since the coming to stream of the Dangote Refinery, as well as the removal of petrol subsidies. And those elements are beginning to reflect in the operating environment for the downstream sector. I should let you know that significant numbers of downstream players are currently having significant issues with their banks, from facilities that were taken to fund trading positions that have gone bad. So the reality here is that the operating environment has changed dramatically for them. The spokesperson who was speaking earlier alluded to some of those issues. Increased working capital requirements has been one of the biggest issues. And of course, the increased volatility of prices. So you can imagine someone who buys products at 900, suddenly product prices drop by 100 naira. And that's the entire profit margin wiped out just because somebody decides to reduce prices or increase prices depending on where the direction of the market is. Of course, there is a global direction for crude oil prices, which has also been a big driver of the behavior of the pricing. We know that the US president has created a lot of issues with his mindset and the sort of pronouncements that he has been making, and that has increased significant volatility in the oil markets. So we're looking at a very interesting dynamic here. And unfortunately, the downstream players are the ones who are bearing the brunt of this market dynamics. And of course, eventually, what you are likely to see is the fear that we always had, is that competition is going to be crowded out because some of these players are going to disappear. And that is when the average Nigerian will start to pay the real price for petrol prices.
But when you say disappear, that got me worried. I can't imagine. I mean, I would like to see Ukadike's face to see how he's taking that particular one. But away from that, looking at all that is happening now, do you see oil prices staying higher for longer?
Not necessarily. The truth is that there is an oversupply in the oil industry. Yes, the U.S. behavior would cause spikes here and there, would cause issues here and there, and increase volatility. But if you look at the general trend for crude oil prices, the general expectation is that prices will continue to reduce over the next few years. And, even inflation adjusted, we're expecting that prices will be around the $60 mark. Now, Perpetual, something you should also take into consideration is the weakness of the US dollar. So in recent times, the US dollar has been a weak currency over the last 3 years. So the reality is that really deep down, it's not like crude oil prices are going up. What has happened is that a weaker dollar has just made crude oil prices look like they're recovering. But in real terms, crude oil prices have been dropping for the past 3 years.
Right, let me talk to you now, Mr. Ukadike. I mean, per your projection, how much will Nigerians sort of, likely pay for PMS? Do you see this affecting supply anytime soon?
Yeah, please take the question again, please.
All right, I'm saying, per your own projection, how much will Nigerians likely start paying for PMS, looking at all that is happening and even being cash-strapped and, things like that?
Well, the factors of demand and supply normally determine price, depending on where you are buying from. There is no uniform price because deregulation has come in. Subsidy has been removed. Price equilibrium or equalization has also been removed by federal government. So depending on each of the country you are buying this petroleum product from, we determine adding the logistics, determine how much you are going to buy the petroleum product. Now, if you know that Dangote is in Lagos, and the only way of bringing products to the upper land and also to the hinterland is through trucking. Some of the DAPMAN members, those who own transport and now the coastal, are finding it very, very difficult to be able to buy petroleum products of the coastal area because of exorbitant charges from master and double taxations here and there. So Dangote has also decided to stop this petroleum product, and marketers are not trucking. And if you look at the logistics issues, you will find out that when you now have your trucking money, which you are going to buy by yourself, and you infuse it into the price of what the petroleum product, you can be able to sell your petroleum product at your own price. And it is competitive. Once you are selling the price that is not competitive, you are going to lose customers. That is why you see MRS now. They are selling relatively one of the best prices in Nigeria, and because of the image in which MRS and Dangote have, it seems that the only one that are selling their products cheaper in this country. So you cannot use them to be able to equalize the price of petroleum products in Nigeria. So as Abuja today, Abuja is selling around 890, 845, 860, and 870, depending on the area of Abuja. And some parts of the east are also selling around 8, ranging from 850 to 870 something. And some also part of the north is selling around 890 to 900, depending on the part of the area of the north you are buying a product.
Okay, let me come in here, please. Let me just come in here. Do you see prices hitting the 1,000 naira roof anytime soon?
There is no scarcity of supply. There is sufficient supply. Dangote is actually doing well in supply. So if the supply remains constant, what you see here is the price war. The price war will continue to go, and other it will go down. But once there is scarcity of petroleum products, the supply, the price will go up. So now that there is sufficient supply, if the electricity will not go up, there will be this price competition, whereby people will want to achieve the true prices. So I don't think it's going to go up because there is constant supply of petroleum products. But anytime there is lack of supply, or Dangote will not be able to supply the quota meant for our daily consumption, it means there will be struggle of buying this product. And once that struggle continues, price increase will take place.
All right, thank you so much. And just before we go, Mr. Oladehin, let me get your outlook for the oil and gas sector in Nigeria.
Okay, so I kind of have a different view on whether prices can hit 1,000 or not. First view is that, look, we must admit the fact that external factors are now contributors to price fixing in Nigeria. If crude oil prices continue to go up or the naira weakens from its current levels, we're going to see prices go up. So that's a fact, that we have to deal with. The second element is that as a country, we still continue to have a situation whereby we are still not very independent from the vagaries of the global market. And I think that's where the big issue is for us, is that what can we do? First, obviously, we need to increase our refining capacity to put us into a point where we're, net exporters of petroleum products. And then secondly, we need to develop the capacity of the local industry to be able to distribute at a minimal price increase from the rest of the market. I think those are the things that we need to figure out a solution around. And of course, we obviously need to solve the downstream industries' financial issues around working capital requirements and all of that. I think if we're able to fix that, then you can't see that downstream industry continue to remain resilient.
All right, thank you so much. And Mr. Ukadike, just before we go, let me get your closing thought.
Well, my closing thought is I have to appeal to President Bola Chinedu to continue to sustain the naira crude policy to Dangote, and also instead of subsidizing refined products, also find a way to subsidize the crude oil to this refinery that is working in Nigeria. Like my brother just rightly said, it is also statement at this point to look at 4 refineries that are obsolete and see how they can be able to revive them. With this, Nigeria can be able to get more foreign exchange and also ensure that there is adequate distribution of petroleum products. Once these things are put in place, I want to tell you the competition will be high and the price reduction. This is Nigeria. We have a lot of filling stations here, independent market are over 90% of filling stations being purchased by us. And while we business is with pricing that marketers, promoters, supervising. So that is important.
All right, thank you so much for your thoughts. Mr. Femi Oladehin, Managing Director, Argentil Capital Partners, thank you for joining me on the show today.
Thank you. Thank you very much.
And Mr. Chinedu Ukadike, National Publicity Secretary, IPMAN, thank you also for joining us today.